Money. It's something we all use every day and really can't live without. Yet few of us stop to think where it came from. Have you ever wondered how it all began? How did we go from trading goods and livestock to buying groceries with our watch and mining digital currencies? From the days of simple bartering to today's digital currencies, the history of money is a tale of innovation, power, and trust. It has shaped economies, empires, and the modern world as we know it. Join us in this video as we journey through time to explore all the major milestones in the evolution of money, from barter to Bitcoin. Before money existed, long before coins or paper notes, people had to get creative when it came to trade. In early human societies, the economy was built on bartering, a system where goods and services were directly exchanged for other goods and services. People relied on bartering. If you were a farmer, you might trade your wheat for a blacksmith's tools. If you were a fisherman, you might swap your catch for fresh produce. These early societies traded livestock, grains, and tools, but bartering was highly dependent on supply and demand. It had limitations. Both parties had to want what the other had. Over time, certain goods would become more widely accepted as units of exchange, acting as a precursor to formal currency in the form of commodity money, which led to a more practical system and the first forms of currency. The key advantage of commodity money was that it held value beyond just trade. It could be stored, transported, and measured. However, it still had flaws. Some commodities, like cattle, were difficult to transport, while others, like salt, could deteriorate over time. Soon, metal objects became a medium of exchange. The Mesopotamians used silver rings, while the Chinese used cowrie shells. The Egyptians valued gold due to its scarcity and durability, and in other parts of Africa, brass rods were a standard trade item. These early forms of money had intrinsic value, were easier to carry, and made trade more efficient. Metal money allowed societies to establish standardized units of trade, leading to early economic systems and laying the foundation for future monetary systems. The next step in the evolution of money came with a breakthrough that would change economies forever: the invention of metal coinage. Around 1000 BCE, the first metal coins appeared in China. These coins were made of valuable metals such as gold, silver, and bronze, making them both durable and universally accepted. The first standardized coins were introduced by the Lydians around 600 BCE in the ancient kingdom of Lydia in what is now Turkey. These small pieces of electrum, a natural alloy of gold and silver, were stamped with official marks to guarantee their value and authenticity, making trade even more reliable. Soon, other civilizations, including the Greeks and the Romans, adopted coinage, spreading its use across the known world. Early governments started minting their own coins with official markings to help prevent counterfeiting. Coins made of precious metals not only facilitated commerce, but also symbolized the wealth and power of empires. The standardization of coin weights and denominations allowed for international trade to flourish. Coins were useful, but carrying around large amounts of metal wasn't always practical. This led to the next great innovation: paper money. Paper money was first developed around the 7th century in China during the Tang dynasty and became more widely used during the Song dynasty in the 11th century. Known as jiaozi, these early banknotes were issued by merchants and backed by government decree. Unlike coins, which had intrinsic metal value, paper money relied on trust in the issuing authority. By the 13th century, explorer Marco Polo reported the widespread use of paper money in China, describing how the Mongol rulers under Kublai Khan controlled its issuance. However, paper money was slow to catch on in the West. In medieval Europe, economies still relied heavily on gold and silver coins, with traders using promissory notes and bills of exchange as early precursors to banknotes. It wasn't until the 17th century that European banks, particularly in Sweden and the Netherlands, began issuing the first official banknotes. These notes were easier to carry than coins and could be exchanged for precious metals, laying the foundation for modern commerce and banking. Over time, banks issued promissory notes, allowing people to deposit coins and withdraw equivalent paper notes. This system evolved into the banking institutions we recognize today. As paper money became more widespread, the need for a regulated financial system grew. In 1694, England established the Bank of England, one of the world's first central banks, which controlled currency issuance and lending. Similar institutions soon followed across Europe and America. The Industrial Revolution in the 18th and 19th centuries further accelerated the development of modern banking. Global trade boomed, stock exchanges were founded, and financial institutions grew in power. By the late 19th century, most economies had adopted the gold standard, meaning paper money was directly tied to a fixed amount of gold. Gold-backed currency was reliable, as nations had a universal standard of value. However, economic crises and world wars strained the system, leading to its gradual decline in the 20th century. Over time, as economies grew, the gold standard would be phased out in favor of fiat money. Financial crises, such as the Great Depression in 1929 and economic recessions after World War II, forced many countries to abandon the gold standard. Governments needed greater control over their money supply in order to stabilize their economies. Fiat money, which is not backed by a physical commodity, but instead by government decree, became the global norm in the 20th century. Central banks managed supply, inflation, and interest rates, making modern economies more adaptable to change. In 1971, President Richard Nixon officially ended the US dollar's convertibility into gold, ushering in the era of fiat money, currency that has value simply because a government declares it legal tender. While fiat money lacks intrinsic value, its stability depends on consumer confidence and effective monetary policy. Today, nearly all global currencies operate on a fiat system. As technology advanced, money became increasingly digital. Credit cards, online banking, and electronic transactions transformed how we buy, sell, and store wealth, making financial systems faster and more efficient. The rise of the internet enabled instant transactions across borders, connecting people and economies like never before. Innovations such as digital payments, contactless cards, and mobile banking redefined how we use money and reshaped consumer habits, reducing the need for physical cash. The world was moving rapidly toward a fully digital financial system. The global financial crisis of 2008 was a severe economic downturn. It began in the United States and spread worldwide. It was caused by a number of factors, including a housing bubble, risky lending, and inadequate regulation. Many banks went bust, whilst others were propped up with government support. People across the globe were outraged. We then saw another major shift in the evolution of money: cryptocurrency. With the invention of Bitcoin in 2009, decentralized money became a reality. It emerged as the first decentralized cryptocurrency, challenging traditional financial institutions. Invented by the mysterious Satoshi Nakamoto and using blockchain technology, Bitcoin offered an alternative to government-issued money, with promises of security, transparency, and financial freedom. Ethereum and many other newer cryptocurrencies soon followed. While still evolving, digital currencies continue to shape the future of money. They have sparked debates on regulation, economic control, and the future of global transactions. With thousands of digital currencies now in circulation, blockchain technology is pushing the boundaries of what the future of money can be. From ancient barter systems to the rise of today's cryptocurrencies, the history of money is a story of continuous evolution. As technology changes, who knows what the future holds? But one thing is certain, money will keep evolving along with us. What do you think the next step in money's evolution will be? Let us know in the comments.